You've been lied to about trading, because the trader making millions every year probably loses more trades than you do. Think about that. While most retail traders are desperately trying to win 70%, 80%, even 90% of their trades, the professionals are quietly getting rich with a win rate so low it would make most beginners quit after 2 weeks. And here's the craziest part. If I showed you my trading history right now, and you saw that I lose 7 out of every 10 trades, you'd probably assume I'm a terrible trader. But what if I told you that exact terrible win rate is the reason I stay consistently profitable? What if the thing destroying your account isn't your strategy, but your obsession with being right? Today I'm going to show you the exact dynamic risk-to-reward framework that completely changed the way I trade forever. You'll learn how professional traders survive brutal losing streaks without emotional damage, the free trade technique that removes fear from your trades, how dynamic trailing stops create life-changing trades, and the psychological shift that allows a 30% win rate trader to outperform 90% of retail traders. And trust me, the final section of this video contains the single mindset shift that made everything finally click for me. Miss that part, and this entire strategy will fall apart when real money is on the line. So watch this video carefully till the end. And if you want to completely change the way you think about trading psychology, risk management, and day trading in general, hit the like button, subscribe, and let's get into it. Because once you understand this, it'll change everything for you. The retail trading industry has an addiction, and that addiction is accuracy. Everybody wants to feel smart, but the market does not pay you for being right. The market pays you for managing risk. That's the difference between amateurs and professionals. Retail traders think trading is prediction. Professionals know trading is probability. And that tiny shift changes everything. See, most traders spend years searching for the perfect strategy. But even if you had the perfect entry, you could still lose money consistently. Why? Because entries alone don't build wealth. Exits do. Let me explain this in the simplest way possible. Imagine 2 traders. Trader A wins 80% of his trades, but every time he loses 5 times more than he wins. Trader B only wins 30% of his trades, but every winner pays him 10 times what he risks. Who survives longer? Who makes more money? Trader B destroys Trader A over time. Not because he's smarter, not because he has magical indicators, but because he understands one thing most traders never learn. One massive winner can erase 10 small losses. That is the entire game. And this is where most traders emotionally collapse. Because humans hate being wrong. Your ego wants to win every trade, but the market punishes ego brutally. The traders who survive long-term are not the traders with the best predictions. They're the traders with the best asymmetric risk management. And later in this video, I'm going to show you the exact psychological trap that causes traders to sabotage massive winners before they ever reach full potential. That single mistake destroys more trading accounts than bad entries ever will. But first, we need to destroy another dangerous belief. The belief that your entry is the most important part of trading. Let me say something controversial. Your entry is overrated. Not useless, but massively overrated. Retail traders treat entries like they're trying to defuse a bomb. They zoom into the 1-minute chart. They wait for 17 confirmations. They stare at candlesticks for 6 hours. They hesitate endlessly. Then finally, they enter the trade. Price moves against them a little bit. And suddenly they panic like the world is ending. The market doesn't care where you entered. The market cares how you manage uncertainty after entry. That's the real skill. Think about professional poker players. Do they win every hand? Sometimes they get terrible cards. Sometimes they make the right move and still lose. But over hundreds of hands, their edge plays out. Trading works the exact same way. You are not trying to win every trade. You are trying to execute a profitable system consistently. That's it. And once you finally accept that, trading becomes dramatically less emotional. And this leads us directly into the strategy that completely transformed my consistency, the scale-out strategy. This single concept changed the way I experience losses and emotional control. And if you fully understand this next section, you'll realize why most traders destroy their profits even when they're right. This is where everything changes. Because this strategy solves one of the biggest psychological problems in trading, fear after entry. Most traders enter a trade and instantly become emotional prisoners. Every candle feels personal. Every pullback feels catastrophic. Every fluctuation feels like danger. Why? Because their entire position depends on one outcome. Win or lose. All or nothing. That's gambling psychology. Professionals think differently. Here's what I do instead. The moment my trade reaches a 1-to-1 risk-to-reward ratio, I scale out. meaning I close half the position. If I risked $100 and price moves enough for me to gain $100, I secure partial profits immediately. The moment I secure that first partial, I move my stop loss to break even. That transforms the trade completely, because now the absolute worst case scenario is no longer a loss. The trade becomes psychologically free. And the emotional impact of this is enormous, because now you stop trading with desperation. You stop staring at every candle, because you've already paid yourself. This is one of the most powerful trading psychology hacks ever created, and most beginners completely ignore it, because they're addicted to maximum profits immediately. But here's the irony. Taking partial profits often helps you hold bigger winners longer. This is possible because fear decreases, and lower fear creates better decision-making. Now here's where this gets even more powerful. Most traders think this strategy reduces profitability because you're taking profits early. Wrong, because the second half of the trade is where the real money is made. And this next concept is the exact difference between average traders and elite traders. The runner, the second half of the position, that's the money printer. That's where exponential growth happens. Because while most traders rush to close trades quickly, professionals understand that one extraordinary trade can transform an entire month, maybe even an entire year. But to capture those trades, you need something most traders don't have: patience. See, retail traders love fixed-take profits, but markets are dynamic. So why are you using static exits? The market does not care about your arbitrary target. Sometimes the market only offers 2R. Sometimes it offers 20R. And fixed exits blind you to massive opportunity. This is why I use dynamic trailing stops. Instead of exiting because I feel satisfied, I let market structure tell me when the trend is actually broken. This is critical, as price creates higher highs and higher lows. I continue moving my stop loss behind the structure. Not too tight, not emotional, just logical. And suddenly, a trade that originally looked ordinary becomes something massive. This is how low win rate traders become profitable. Not through constant wins, but through disproportionate winners. And here's something most beginners never realize. Massive trading gains usually come from a very small number of trades. A few monster runners can completely carry your performance. But there's a problem, a huge psychological problem, because holding runners sounds easy until unrealized profit starts disappearing. And that's where most traders sabotage themselves. This is where most traders fail forever. Not because their strategy is bad, not because they lack discipline, but because they cannot emotionally tolerate volatility. Imagine this. Your trade reaches 5R. You feel amazing. You feel unstoppable. You start mentally spending the profits already. Then the market pulls back. Now your 5R profit becomes 4R, then 3R, and suddenly panic kicks in. Your brain screams, "Close the trade. You're losing profits. Take the money now." But here's the truth elite traders understand. You are not losing money. You are paying the volatility tax. That pullback is the price of admission for extraordinary gains. Because if you want the 10R, the 15R, the 20R trade, you must be willing to experience temporary discomfort. This is the emotional barrier that separates profitable traders from everyone else. Most traders cannot handle uncertainty after profit appears, so they sabotage the trade early, and mathematically, that destroys their edge. Because if your winners stay small, while your losses remain consistent, the entire risk-to-reward model collapses. This is why emotional exits are so dangerous. You think you're protecting profits, but you're actually shrinking your long-term expectancy. And later, when you look back at the chart, you realize the trade continued another 500 points without you. That pain is gut-wrenching. But here's the deeper truth. Trading success often requires emotional behavior that feels unnatural. Cutting losses quickly feels painful. Holding winners feels uncomfortable. Accepting low win rates feels embarrassing. But comfort is not profitable. Comfort is expensive. And if you're constantly optimizing your trading for emotional comfort, you will unconsciously destroy asymmetrical opportunities. Now, this next section is the mindset shift that truly changes everything, the ego death. And if you don't understand this, you will always sabotage your consistency eventually. To survive with a 30% win rate, your ego has to die completely. Because your ego wants to feel intelligent. It wants validation. It wants certainty. It wants control. But trading is controlled uncertainty. And the sooner you accept that, the faster you improve. See, most traders secretly believe losing means failure. So every losing trade becomes emotional. But professionals see losses differently. A loss is simply business expense. Never forget that. Think about casinos. Casinos lose money constantly, yet casinos remain incredibly profitable. Why? Because they understand expectancy. They know that over a large enough sample size, their edge plays out. That's exactly how professional trading works. You are not trading individual outcomes. You are trading statistical advantage over time. And once this clicks, your emotional stability improves dramatically, because now you stop obsessing over this trade and start focusing on the next 100 trades. That mindset shift changes everything. Suddenly, losses feel smaller, patience becomes easier, discipline improves naturally, and most importantly, you stop revenge trading. Because revenge trading is simply ego trying to recover emotional damage. But if your ego is detached from outcomes, you no longer need emotional revenge. Now here's the crazy part. The lower your emotional attachment becomes, the better your execution usually gets. Because fear decreases, greed decreases, impulsiveness decreases, and suddenly your trading becomes calm, systematic, and professional. This is why elite traders often appear emotionally detached. It's not because they don't care. It's because they understand probability deeply enough to stop reacting emotionally to temporary outcomes. This brings us to the final realization, the one idea that completely transformed my profitability forever. Most traders are trying to predict the market, but prediction is not the real edge. Management is. That's the secret. Your entry simply opens the trade, but your exits determine whether the trade becomes a scratch, a small win, or a life-changing runner. And this is why dynamic risk to reward is so powerful, because it adapts to the market instead of forcing the market to obey you. Retail traders say, I need this trade to hit 3R. Professionals say, I'll let the market decide how far this move wants to go. That flexibility creates massive asymmetry, and asymmetry is where wealth is built. This is why low win rate traders can outperform high win rate traders dramatically, because the size of the winners matters more than the frequency of winning. That's the hidden math nobody teaches beginners. And once you fully internalize this, you stop chasing perfection. You stop hunting magical indicators. Instead, you become obsessed with risk management, trade management, and psychological stability. That's what actually builds consistency, not accuracy, consistency. And ironically, when you stop desperately trying to be right, your trading often improves anyway, because now you're operating from logic instead of fear. So the next time you lose a trade, I don't want you asking, how can I avoid losses forever? That question destroys traders. Instead, ask, how can I make my winners so powerful that losses stop mattering? Because that is the real game. Not prediction or perfection. Definitely not ego. Management. The market rewards traders who survive long enough for probability to work in their favor. And the traders who survive are the traders who understand this. You do not need to win often. You simply need your winners to matter more. That's the entire secret. The entry gets you into the trade, but the exit writes the check. So stop obsessing over being right and start mastering dynamic risk to reward. Because once you do, a 30% win rate might become the most profitable thing that ever happened to you. If you enjoyed this video, subscribe for more trading psychology and comment below, what's your current win rate? Because I guarantee most traders still think the answer to profitability is winning more, when in reality, the real answer is managing better.